Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Welcome to the Conscious Day Trader. I'm Yanis, and today we're going to break down another trade from the London session, especially the pound USD, and I was also looking at the euro dollar, but ended up taking the trade on the pound dollar. So if we jump on the screens, we'll see you can see a lot of lines. This is from the Scruffy levels, so monthly levels, weekly levels from the Scruffy trader, but also ICT in terms of finding the trade in the London session and executing for the afternoon going into New York. So let's see what we found out. We're going to jump to the daily. Let's hide everything. And we wanted to create a bias for the day. So the bias for the day came from this move here. If we drag a Fibonacci level from that point to that point, we'll see that that's retraced to the 50%. So I didn't take that Fibonacci level, I took this one. And we can see that if we go back to the beginning, so that's the day missing, this is what information we had. We saw that the price could do two things. One, it would come down to the 50%, which I've annotated there with the black lines if I take the Fibonacci off, to the 50% daily and 61%. So it would retrace all the way down here, which potentially will do. I don't know if it's going to be this week or the next week or the next month. You will never know. But also what we also have identified areas of fair value gap from ICT from the lower time frames here, which would be areas of attraction. And as we will see on the going down the time frames, that did happen. So what we did is looked at the previous high of the day and the previous low, and I would drag that to that previous day and that previous low, and that was on the 30th of December. Let's play on that. So that's the second, so that would be the high and that's the low, which we'll see that is sitting exactly on a monthly level, the previous daily high. And I was long on the pound dollar, and you'll see from the results. And the reason I was long was that I expected it for it to come down to take the fair value gaps and take the liquidity that was resting above this buy side liquidity that was resting above here. Well, as you can see here, I've put the equilibrium in. That means that we're in a discounted area, and that is from the range that it's been from the previous. If you don't consider the today's candle, it would be from this range here all the way to that up there, and we would take that 50% as the equilibrium. So we were looking for discounted. We were in a discounted area. As you can see, how well the Fibonacci retracement got triggered to pretty much to pip perfect, and I had expected these gaps to be filled before we come up higher to take out the buy side liquidity above these this swing high. So the plan was, if we go down to the 4 hour and to the hour, if I take away, let's go to the beginning of the London session with the replay, and that would be there. So what I was expecting is to break the previous daily low, fill the fair value gaps. And if you're wondering why is there fair value gap there, if we grab the zoom tool, you will see that fair value gap there on the 1 hour. So you had multiple higher time frames confirmations that you were looking. That's the other one there. or fair value gaps. And I didn't expect it to go all the way down to the 50%, but it did. That just created a better, and the other one, fair value gap, was here. It might be very small, but you can see it. It's from that wick to that wick, and it's actually lining up perfectly with that 50% daily retracement on the Fibonacci level. So it worked quite well. So let's go down to the price action of the actual move. And we want to see the whole day, so we'll just move forward to the end of the candle, take away the replay. So this continued to come down. I had a very small position on at this fair value gap, and then as it went down, I waited for the 50% to be retracement. I then waited for a break of structure, and a confirmation to go higher. And that came after, if you're looking at the ICT concept, we had this swing high, which got created if you go on a lower time frame, such as the 1 minute. And if you're following ICT, you know that if there's not a setup in the 15 minute, you just go down the time frames to find a fair value gap at the lower time frames. And this was on the 1 minute. We can see here 1, 2, 3 break of structure here, comes retest, and that would be my entry. And yes, you would sit a bit on heat. Stops were below this swing low, never got retested. And then as we broke above this level and got another confirmation, I built in my positions in, and I exited above this swing high here. Obviously, if I had held, it would be quite a lot of money. But what's interesting is to see this is the first day that the market is pretty much coming back from the bank holiday in London on Monday. And in terms of news, we didn't have any news. We had only the Euro inflation rate, which came out, and it was a negative for the euro dollar. So I stayed out of that, and I traded the pound dollar. So what we saw is that increase. So from the London session, created the ultimate low on that 50% retracement on the Fibonacci level, and then we had that structure break. Yes, it came back to give you an opportunity to get into this run, then broke the high there, only just created, if you want, a nice area of buy side liquidity, equal highs, and came through, took it out, retested that area there, and then off it went. So that was the trade, and it did return quite nicely for the first day of the year. I am doing a live session with Jordan in a few hours time. We're still in the New York session, so that would technically be the New York close. So it was quite a volatile day, considering first day back. What we're expecting now to finish, normally the New York session closing hours, there, don't quote me on this, but there's normally a continuation of the direction of the day. So it'll be interesting because I don't normally trade the close, but because we're doing the live, I will try and see if there's any setup that I would be willing to take. Last thing, if you're wondering what these red lines and how I get these key levels, is from the Scruffy Trader, and you can find him on YouTube, and he's got a Discord with I believe he calls it the Scruffy Way, which is like a 40 lesson course. ICT, you can find it free online. He's got 2022 mentorships and other areas where it's I've really enjoyed it so far, and it's been quite good. Don't forget to subscribe to the channel if you want to see these trades as they come, and also I'll be doing lives of these trades, so make sure you don't miss out. Subscribe and like this video, and I'll catch you on the next one.